And we are live. This is Travis from Trade with Travis, Carter Capital Expert Advisor Reviews. I hope everybody's doing very well. Hopefully everybody end up having very good holidays. Merry Christmas, Hanukkah, whatever you end up celebrating. And also hopefully you end up having a merry, happy new year. And hopefully you end up having a prosperous 2023. Hopefully you're doing it with us, obviously. But more than anything else like that, hopefully everybody ends up making and achieving all of the dreams and aspirations that they end up having as we end up going through. Let's go ahead and get through the disclaimer real quick. And then after that, we'll go ahead and jump right into everything. And we'll go from there. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education. And from that education, you can be able to make your own informed decision. Now, understand that trading involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you can end up making money today. So this is the first time that we are going through and kind of putting everything else through. I'm going to show myself on the screen. What's going on? My name is Travis. If this is the first time that you've ever watched my live stream or anything else like that, what we end up doing here in the mornings is that we go about 30 to 35 minutes and being able to take a look at the chart, seeing what's happening from a Forex standpoint, a index standpoint, cryptocurrency standpoint, and also be able to talk about what we do from a live trading standpoint, prop firms and everything else like that. Year 2023 is going to end up being a great year for all of us. I truly do believe that. We end up having a very good 2022. We're going to end up going through some of the history that we end up having that was in my FX book, using the FX Striker, using our Vortex strategy, which is our manual strategy that we end up using the Boss EA, using the Boss Band EA, and everything else that end up going along with that. All of the stuff that we end up learning, and also trying to get into what we're doing for the live trading session as well. Now, do me a favor as we go through and get everything else situated. I'm going to keep this somewhat quick. Make sure that you end up liking, sharing, subscribing. Please make sure that you end up joining our overall Discord group. I'm gonna send I should have had this already set up. First blunder of 2023. Hold on, let me see. Get this and make sure I end up getting everybody the link so y'all can be able to see that. Interested in being able to learn a little bit more about the Discord channel, and being able to hop inside of that group where we end up doing a lot of stuff for its education and talk about prop firm challenges, talk about there's a library, a public and private library of a lot of information that you can be able to use for your overall education. All you got to do is be able to go to that link. It's right there inside of the link, right there to where you can be able to go through and be able to go from there. Now, with that being said, let's go ahead and take a look at what's happening with the charts. Obviously, we ended up having a very good year when it came down to most of our pairs throughout the overall year. Great growth. December is December. It always does what it always does what it does at the end of the year. But overall, felt very good about how we end up progressing throughout 2022. I learned a lot, and now we're going to end up using that to be able to hopefully be able to do the same in 2023. So with that being said, let's go ahead and jump into what we're doing. If you are in the Discord group and you are watching live, please make sure that you end up going to the live stream question area. And we end up placing in our information. I'm going to send a message to everybody real quick saying that we are live on YouTube. And we end up typing in the questions from there. But like always, what we end up doing is we take a look at the United States dollar index, or we take a look at the big three. We end up taking a look at the economic calendar, see what's going on with that. Then after that, we end up taking a look at oil and gold. We end up taking a look at Bitcoin, see where it's at. I haven't been trading Bitcoin all that much. We end up taking a look at everything else that kind of goes along with that as well, and see how well the market has been moving. So let's see. FX Street. So this is what we know. Bond and stock markets will be closed in Europe and the United States for the observance of the New Year holiday. S&P Global will release final revisions of December manufacturing PMIs, Germany, in the Eurozone. So there's not going to end up being much trading as of yet. I end up talking about, especially with my risk takers, we end up talking about being able to get started on prop firm challenges on the 2nd, and I end up quickly remembering that that today there was not going to end up being a lot of news to be able to work off of, and the true starting of the week will actually end up being on Tuesday. So with that being said, from a prop firm standpoint, I am not going to end up starting my prop firm challenges or anything else like that actually until the 9th. Which will end up giving a full week of being able to see how the market is going to react for 2023. And then after that, obviously get everything else situated. Now, from a numbers standpoint, it doesn't necessarily change your overall risk factor, but it does change the volatility that we're going to end up seeing. And I would rather have the volatility to be able to trade with compared to anything else. But today it's a trader's day. Overall, we end up having manufacturing PMIs from Spain, from Italy, and from Germany. All of those numbers were kind of relative to what they end up having. This is the first time I actually end up taking a look at the charts literally since the last time we ended up talking, which was the 22nd. So a lot of stuff has changed overall in a slowing down market, and we'll see how that kind of affects everything. United States dollar index, what is happening? Market end up pushing all the way up to, we're just talking in previous, market in September end up pushing all the way up to a high of 13,556. It broke a inner trend line in which it respected for a very long time within that week of November, at the beginning of the week, November the 6th. Once it ended up breaking that inner trend line, it ended up gravitating toward the outer trend line. So this is the trend that we're working off of currently right now from a weekly standpoint. Now, it has not hit the trend line. It has not hit the actual outer trend line as of yet. But that also means that we probably should be able to pay attention to and see how the market's going to end up reacting the first few days of the year to see if we're going to end up having a major pop or a major drop to the downside. And that's the primary reason why I kind of wanted to be able to wait until the 2nd to be able to start trading compared to starting to look at it on the 1st based off of this. Starting on the 9th compared to starting it tomorrow when it came down to the prop firm challenges. I want to know how people perceive the market first before truly being able to throw my money in. That's even with live trading, throwing my money in when it comes down to that. From a daily perspective, we can see that the market was a consolidation, but essentially what happened was when it ended up breaking this consolidation zone, remember when you end up breaking one consolidation or breaking a support, you're going to end up finding the next support. So it broke that support, it fell down to the bottom. Currently right now, we're at the support of where the market actually ended up starting off at from June and kind of remain to be in that overall area. We're pretty much inside of that same consolidation point overall. Now, with that being said, I'm going to create a new consolidation box because we know that it's basically back in the same area, which means that now we know that it is a high volume node, that this is probably a high volume node area, at least at the beginning of the year. The question is this market going to end up breaking to the downside of this one and continue to move toward the outer trend line and break below it and keep on moving down to the daily D extension at 12,657? Or is the market going to start to be able to push up towards the resistance and try to push right back up to that 13,160 area before possibly being able to break out? Obviously, we don't know that because we don't have enough volatility between everybody else in the trading day. And obviously, because it is 6:45 in the morning, we're probably not going to see much of anything until about 8 to right around that 11 o'clock time frame. So it's worth watching today to be able to see how the market's going to react today. It's really worth watching to see how the market's going to end up reacting tomorrow. And then after that, we end up making our decisions on what we need to do for us being able to trade. So United States dollar index, I am in a stand and basically look and be able to evaluate how the market's going to react. But we know that we're at the bottom of support on where the market was in June of 2022. Okay, United States dollar index. I'm sorry, U.S. oil. We already did the United States dollar index. Oil has fell down a little bit, and we talked about this a while ago. We're gonna start off with the weekly, and I talk about why I have that bearish crown that's actually on the screen, and we talked about that how I believe that the market was going to end up falling down ultimately, but from a weekly perspective, the market ended up getting up all the way up to $124 a barrel based off of what ended up happening with Russia and Ukraine at the beginning of when that happened. Since then, the market has fell off, has lost about half of its percentage, fallen all the way down to as low as $71 a barrel, which is good for everyone that is obviously having vehicles that have V8 motors and everything else like that, you end up getting a little bit of reprieve. I know in my area, gas is down to last time I seen it was like 280. But the question is, was that just admiration toward the end of the year? Because typically when we look at oil typically ends up having, oil typically rises by the end of the year. But currently right now, I'm going to treat this as the outer trend line that we're going to work off of, or the new outer trend line that we're going to work off of for this overall year. I cannot call it a channel or anything else like that, but I can say that the market is still in phase when it comes down to its Fibonacci. Currently right now, we are in the sweet spot. The sweet spot is the 618, 786, and 86 perspectives for its overall movement. It's fell all the way down to the 86 on this overall U-turn. From a weekly standpoint, it's basically at 37% when it comes down to the stochastic, which means that it's in a position to where you could possibly be able to make a move off of it, but not necessarily in the greatest position to say that the market's going to end up saying that we know that the market's going to go up, or saying that we know that the market's going to go down. We just don't. I just don't personally know that yet. But let me get rid of this King's Crown. We'll talk about that later. But it's still in a upward phase. Let's put it like that. We still are in an ABCD sequence that has not been broken. And this is considered to be the fractal low. There has not been a counter trend line break as of yet that has broken. Once it does break, then after that, we will consider being able to possibly be able to make a move to the upside. But from a weekly standpoint, the market has been showing over the course of the last, over the course of the last 30 weeks that the market has just been pushing more to the downside. So currently right now, the weekly is down. The daily, if we take a look at it, the daily is down as well, but both of them are showing signs of, being able to push back to the upside at some point in time, but it truly has not. It truly has not broken this trend line as of yet, and because of that, I'm going to stay away. I would call it a channel. Technically, you could call it a channel. But right now, at this particular point, I just want to see how the market's going to end up playing out. We are in another position where we just need to wait. It broke the A, and that's where the actual King's Crown came in at when the market ended up breaking the A to the downside. Since then, we have seen that this movement has been very close to the D extension. The D extension from a downside perspective is at 64.37. So 64.37 is the new D extension. This is the area where the market could potentially end up falling down to before actually being able to make a little bit of a rebound based off of that movement. If that does happen, it actually will stay inside of the upfield, the long-term upfield. But overall, as we go through and take a look at it, we may end up seeing, or I still will end up saying that the market's going to end up pushing more to the downside than it would be to the upside. So oil, I have a bearish bias. It's showing signs of going to the upside. So we're looking for a high price. Currently right now, the day is in the sell zone. So I will look for a counter trend line break. But even with that being said, there's better charts. They're going to end up being better charts going into 23. Going into this year that I'll probably look at being able to take advantage of. Plus, oil is a little bit more of a slower mover. So I'm going to stay away from it for right now. Gold, speaking of movers, gold ended up pushing above 1,800 finally. Let's see. As we end up looking at gold, we end up having a couple orders in the way that it was placed in. And essentially, this was the order that we end up having. I'm going to start off from a weekly perspective. And then after that, we'll talk about the orders that we end up having before we actually stop trading for the year. From a weekly perspective, there's a long-term resistance at 2070. There's a long-term support at 1615 that the market ended up falling down to. Since then, the market has pushed back up inside of this overall area as we go through. I know I got a lot of stuff that's actually being shown from here that we can kind of get rid of at this particular point because we don't need it now. But since then, the market has broken out of this resistance at 1800 and has pushed up. There's a resistance high from this previous movement that's at 1872, where I think that the market will go to. Remember, when the market breaks a resistance, it will go to another resistance. I think that the momentum of gold actually end up pushing a little bit more, honestly, because of the lack of volatility in trading when it came down to the United States dollar. With that being said, we can use that to our advantage with the market being in a R3 position from a daily perspective. And we know that the market is basically clearing highs at this particular point. So if it breaks past this resistance, then I do think that we'll have a strong chance of being able to move up to the upside. Now, what does that mean? If we take a look at that and we kind of correlate that to what we end up seeing with the United States dollar index, has been moving to the downside over the course of the last 30 weeks. And if that is moving down, then that means that indexes should go up. That means that gold should go up. That means that Bitcoin actually should see a little bit of a rise compared to what they end up having for its actual falling down in prices and stuff like that as well. But once again, the only way that we can truly be able to know that is kind of seeing how everybody kind of reacts to it at the beginning of the month when it comes down to these pairs. But what we left off at was that we end up placing in an order. We ended up placing in two orders. There was one order at 1811. 1811 was the entry price because it was the top of the resistance. We ended up saying that we wanted to get out at 1872. We ended up having a stop loss of 1789. What we ended up getting in and getting out at was basically right at the top of this consolidation. And then after that, once we ended up knowing that it was going to end up being slow, we got out of it. But if you stayed in it, then you would have got stopped out. Currently, right now, the market's at 1822. The take profit is still about 50 points away. The question is, would I get into this market for it being able to trade? The market is not open for us to be able to evaluate. So I'm going to say yes if we end up getting a good setup. If we don't get a good setup based off of the gap or whatever else may be the case, then I'm just going to let gold just go on the wayside and find a better situation for it being able to get in. But our thought process on where this market could be able to go is still solid in my mind. Just because we don't have any movement or data based off of the market still being closed, I would kind of wait and kind of see how the market's going to end up reacting off of that first before doing anything moving forward. So I'm going to still say no on this one. But until we end up kind of getting a little bit more information, it makes it a little bit easier for us to make a better decision on what's going to go on. Okay. Last one, we're going to take a look at Bitcoin, and that will be it for today. Obviously, because the market is not necessarily moving, but wanted to make sure I end up kind of getting back out and being able to talk to everybody when it came down to the live stream. So I'd rather go ahead and do this and know that we don't have any trading to be able to work with, but be able to evaluate what the market actually is right now. All right, so let's talk about what happened with crypto. I think we all can agree and say that this was a bad year for cryptocurrency in general. Market ended up pushing all the way up to 65,000 at the beginning of the year. Pushed all the way up to 65,000 in early 2021, and then after that started to be able to fall. It broke that $29,000 support level, and then after that fell down and broke another support level at this particular point. It is moving. It is showing signs that it's stabilizing right around the 15,800 area and the 18,000 area. And currently, until the market actually ends up breaking out of that area, I will not do anything for us being able to trade. My orders, if I'm looking at being able to buy, will probably end up being right around 15,800 and see if we can be able to buy that support. But if it breaks 15,800, then there's a strong chance that the market could fall all the way down to 12,655 before being able to make another movement, which is this gold line turning past resistance into a future support based off of the movement that actually ended up happening in early 2020 when the market really started to skyrocket back up. So that is what I see from a weekly perspective. Now, Bitcoin charts are never really good from a weekly perspective, just overall. But from a daily perspective, we can truly see that consolidation that we end up talking about right before the holidays end up going out. We end up having a heavy push to the upside. That was December 12th, December 13th. It got all the way up to 18,240, and then after that, it slowly started to reject back down. So we know truly that we don't have to look at that as consolidation anymore. We don't have to look at that as consolidation anymore. The biggest consolidation spot that we end up having currently right now is this area right here, in which I'm going to change into a different color. Okay, so, okay, there we go. So there goes our consolidation right there, 15,800 is the support, 18,240 is the actual resistance. We're in the middle of this consolidation because we're in the middle of it. There's a 33% chance of being able to win. Because there's a 33% chance of being able to win, I am not trading until I know that either we hit the support and the market bounces off the support at 15,800, or we're at the resistance, and then after that we end up making a move based off of that overall. So really nothing to be able to pay attention to on this one either. Until we end up seeing the market kind of truly either fall to support or break the resistance. But it's good and worth knowing of where the market actually is at this particular level. So with that being said, this would be a good point to be able to talk about US 30. And US 30 will be the last one that we'll talk about. We'll talk about NAS and everything else like that going into tomorrow once we end up getting more information and data. But from a weekly perspective, if we truly look at where US 30 was overall for the year, that was the beginning of the year. The market was at 36,000. It fell all the way down to 28,495. And kind of just remained to be in this downward channel until kind of breaking up to the upside and kind of breaking the counter trend line break to the upside in the highest peak, or the average price of where it was at 34,400. Since then, the market has kind of stabilized right in that position. Has found support at the 32,500 area. We take a look at this from a daily perspective, and at some point in time, I'm going to have to get rid of all of these lines. I have to clean up all these charts before we go through and have all these trades. All right. Last time we looked at this from a daily perspective, we end up having a consolidation zone between 34,660 and 33,300. The market broke below 33,300, end up hitting our take profit at 32,500 that we end up talking about 32,980. From there, end up falling inside of consolidation, and has been inside of consolidation for pretty much for a little bit of time as the holiday seasons actually end up ending off. So currently, this is where we're at. We take a look at this from a high volume node perspective and kind of look at the consolidation that we end up having before. We're basically in a low volume node area overall, but if we end up using this data and kind of getting a little bit more information off of it, we can clearly see that this is a high volume node that we have to work off of, and this is the area of where the new consolidation actually is. Now, if we're being conservative, we can say all the way down at the bottom, in which we probably are going to end up saying that that is the true natural consolidation. I'm going to get rid of this point so we don't need that anymore. Once the market ends up breaking above 36,460, then after that, we can be able to look at the market trying to fill this overall hole of 33,590 as a scalping position. If the market breaks below that and keeps on going to the downside, we know that the market will fall below 32,700 first, possibly end up pushing towards the 32,500 area, and then after that, we'll see that it will end up breaking a support, and it could fall down to the support level again, which will be at 31,920. Currently, right now, no trades to be able to take off of this one. Doesn't make any sense to be able to do anything off of this level, but something to be able to pay attention to overall. it's good to be able to get back into it. If you like what we end up doing, please make sure that you end up take a look and subscribing to the Trade with Travis page. Make sure that you end up taking a look at our next latest Expert Advisor review, in which we end up doing a review on the Undefeated Wolf. We end up doing I'm sorry, I didn't put two together. We end up taking a look at the Wolf Triangle. We end up taking a look at the Undefeated we end up taking a look at the Wolf Scalper, and we end up taking a look at the Undefeated Triangle. We're actually going to end up doing one on the Boss EA and Boss Band EA. So, Boss Band EA, remember, comes out in February. On Valentine's Day, we end up taking a look at the Boss EA and being able to take a look at those numbers. Actually, very surprising when it came down to those. It's always good to be able to have an unbiased approach and have somebody else evaluate your system, so they can be able to give you the best information and more feedback. And overall, just excited for what's going to end up happening in 2023. Like always, make sure that you end up planning your trade and trading your plan. Interested in being able to join the overall Discord, please make sure that you end up taking a look at the overall QR code that's over to the right of me, and be able to go from there. Like always, plan your trade your plan. I see each and every one of y'all in the next video. Take it easy.